Welcome to The Bottom Line, where we unpack some of the main business and economic stories of the day. I'm your host, Alexandra Marhevich. Now, the Czech National Bank has just revealed its latest interest rate decision, dropping rates by 25 basis points. And today we'll explore what it means for growth industry and everyday Czechs. So joining us is Michal Skořepa, economist at Česká Spořitelna, a major Czech bank. So he'll help us decipher now the latest data and discuss whether the Czech Republic can recapture its pre-pandemic momentum. Hello, sir, and welcome to TVP World.
Good evening.
So the Czech National Bank has cut rates and inflation is tamed, deficit is shrinking and the economy returned to growth despite fiscal consolidation. So at first glance, this looks like neoliberal fantasy come true, doesn't it?
To some extent, yes, you're right, but we certainly have in the Czech economy, we have issues to be solved in the future. But it's true that in terms, let's say, of the cyclical developments, the short-term developments, things are getting better. They seem to be returning to sort of some kind of, short-term equilibrium of sustainable levels. We are coming back from the wildness back to safer state of things.
But inflation, correct me if I'm wrong, but inflation could tick up again, meaning the central bank may be cautious about cutting rates too quickly, especially since central bank has already paused rate cutting at the end of 2024 because of inflationary fears.
Well, I would not really say that a fear of inflation jumping again higher is really among the biggest worries at this moment. I think most people who produce forecasts for Czech economy and inflation expect it to hover roughly where it is and probably rather go down very slowly maybe, but still go down. We don't really expect, not even for any, let's say, statistical artificial reasons like low base from the previous year or things like this. We don't really expect any more hikes or spikes in inflation. So that's the baseline. The basic scenario is slow down towards 2% inflation target of the Czech National Bank, and in line with that expectation, I think is what the Czech National Bank did today, which is the small cut of 25 basis points, and also expectations of a few more cuts during this year, maybe next year. So I think that this package, I would say, of expected slowdown in inflation and slow cutting of interest rates makes quite some sense, I would say.
So now let's perhaps talk growth, because after modest growth of around 1% in 2024, now the forecasts show the economy expanding by 2% in the coming years. It's a far cry from pre-pandemic 5%, like for instance in 2017. So is that realistic, or are there structural weaknesses that could keep the economy below that threshold?
I think 2% for this year is fairly fine if you take a look at what, for example, the Ministry of Finance is expecting, or what we expect, what other banks expect. Everybody talks roughly about 2%. Some people think maybe slightly less, some people say more, but 2% is, I think, unless something very dramatic happens, can be expected. It is certainly much less than what we used to see before 2020, let's say. But that's, in a sense, I would say almost logical. That could be expected because Czech Republic undergoes the process of convergence towards Western neighbors, let's say, or Western Europe, Western economies. And part of this convergence story is that the closer you are, the slower the whole thing works. So I think it's absolutely fine if the numbers are lower. That's something to be expected. 2 maybe is a little bit lower. Given what I said, it could be a little bit higher. I think at this moment, most people would say that steady state sustainable something like this. But 2 is pretty good given what was happening in the last several years. So we are happy, and I think everybody will be happy if that really becomes true.
Now, I read the latest IMF report, and it says, if I may quote here, that the Czech economy has underperformed European peers in the post-pandemic period, and economic convergence has come to a halt. So, and this apparently has been attributed to the country's links to the specific low-growing trading partners like Germany. So I'm really curious about your take on this.
Yeah, this is a very, very interesting issue, I think, because usually when people talk about Czech economy, they tend to say immediately that it behaves a lot like the 17th land, a part of Germany, so to say, in a funny way to put it, the closer links to German economy. So now it's really interesting that it looks like the Czech economy has been able recently, over the last several quarters, let's say, to show a sort of slight decoupling from the German economy, which obviously has serious troubles, and they stagnate essentially for the third year in a row. That's not the case for us anymore. As we said, growth last year 1%, this year maybe 2%, which looks like we really are able to behave in a different way. And if you dig into the details of the numbers, you will find out that the reasons are probably located both inside the economy and outside. If we take a look at the inside factors, it's probably just simply better sentiment. So Czech households' demand is growing faster than the demand or expenditures of German households. Investment, fixed investment of companies into buildings and machinery and so on, roughly stagnates in the Czech Republic, maybe falls a little bit year on year, but in Germany it falls much more. So again, that looks like a sign that the sentiment, the mood in German companies is much worse. They are much more afraid of what's coming. They are much less sure where exactly to invest money and if to invest them at all. So that's the inside picture, which seems to be better in the Czech Republic. And also outside, if you take a look at the tempo at which the exports grow, for Germany, exports fall, while for Czech economy, they grow quite vividly, which seems to indicate that simply Czech exporters have been able to find a little bit better ways to sell the production. It could be also, of course, a structural thing. Specifically, if we take a look at the automotive sector, Czech automotive companies mostly focus on combustion engines, so they are not so much hurt by the recent fall in demand for EVs. That's one factor. And also there are some maybe other aspects like the production in Czech economy is more focused in cars. I mean, in the automotive sector is more focused on middle class cars. So if the demand, especially in Germany, is now hurt, and German households maybe save a little bit more money because they don't feel well currently, maybe they prefer a little bit more than before to buy Czech cars because they are cheaper, even if maybe they are not perceived as such a high quality and high standard as German cars. The price now maybe is more important for many Germans than it used to be before. So these are maybe the small differences which end up in the basic picture that Czech economy fares better than German economy, even.
Right, so I gather from what you're saying that the Czech Republic can overcome now these structural and external challenges in time to regain a robust growth path. So thank you so much, sir, for sharing your expertise.
Thank you too.
Now, that was Michal Skořepa, economist at Česká Spořitelna, and that was his bottom line for today. And remember that in the world of business, the bottom line is the only line that counts. Alexandra Marhevich signing off. Goodbye.